All right, let's talk about our top story this morning. And Janet Yellen, Treasury Secretary, yesterday sent a letter to congressional leaders on Wednesday saying the federal government could reach its borrowing limit sometime in October, although she didn't give an exact date for that. But basically, this, she says, is a financial Armageddon waiting to happen. She says, quote, "I respectfully urge Congress to protect the full faith and credit of the United States by acting as soon as possible." Well, good. And so no wonder stock market down, taking quite a tumble yesterday. Fourth straight day that it could be down as a result. And so in short, as she describes it, if Congress doesn't raise the limit on federal borrowing, the federal government will most likely run out of cash and extraordinary measures next month. In short, a default would be an economic cataclysm. Interest rates would spike, the stock market would crater, retirement accounts would take a beating, and the value of the U.S. dollar would erode, and the financial reputation of the world's only superpower would be tarnished. And Mark Zandi, chief economist at Moody's, says it would be financial Armageddon.
Think about what they're saying. Doesn't raise the limit on federal borrowing.
Right.
More debt.
And by the way, you think, oh, we're borrowing so much money from China. We're not actually. It's like 1 or 2%. It's not actually that much we're borrowing from China. You know who we are borrowing from? Ourselves. We're borrowing from Wall Street, by the way. That's who we're borrowing money from, is Wall Street. Wall Street banks. Overwhelmingly, we're borrowing from Wall Street. Isn't it amazing? I mean, we're getting zero interest loans from the federal government, and yet they're borrowing from us to stay solvent. So that, what happens if suddenly your retirement account tanks? They can't pay these things back to Wall Street. The reserve currency of the world would be absolutely tarnished as a result. And maybe that's what needs to happen, sort of a cleansing here. It would be a disaster. Jamie Dimon, JP Morgan Chase CEO, said, not even think about it. Like, don't even think about going down this path again. During a hearing in May, he said this, and he said it again yesterday. He said, you have to realize the damage this would cause America. It would literally cause unbelievable proportions and damage America for the next 100 years if we defaulted. Janet Yellen says, until the last minute, we can't wait until the last minute. But of course we're going to wait till the last minute. Of course we will. This is going to come right down to the wire, and we're going to have this squabble back and forth. Because here's the timeline, folks. Nancy Pelosi right now, she told Democrats on Wednesday that she won't include a debt limit increase in the reconciliation package, which is, being up for a vote now, or coming up for a vote. Maybe by the end of September, we'll get to your stimulus update on all of this and where we think stand between Joe Manchin and President Biden. That's coming up a little bit later. We'll talk about that. But Pelosi suggested that Democrats have several options on increasing the debt limit, but they're going to attach it to the continuing resolution, according to sources close to this issue. Senate Minority Leader, though, Mitch McConnell, however, has said that he won't allow this to pass. He's not going to allow the debt limit to increase if Democrats go ahead with the reconciliation package. So it's a game of chicken once again. Who's going to win this time? I think when you have people like Mark Zandi, Jamie Dimon, and you have all of these Wall Street guys saying, don't even think about it. Like, let's not even get close to October for this financial Armageddon, because it's going to be irreparable damage to the economy. So I think there's going to be a bunch of phone calls from these big CEOs calling up Mitch McConnell. Hey, Mitch. Hey, Turtle Boy. Remember those millions of dollars that I gave you? Yeah. Remember that. Remember that while you're sitting there trying to sit on raising the debt limit ceiling. So there's going to be
how
lots.
We made sure your wife got her loan?
Right. Yeah, you remember how Elaine Chao, your wife, so conveniently got PPP loans, hundreds of thousands of dollars? You remember that? Yeah, we'll make you remember that.
We're calling on our favor.
That was a loud one. Almost had a piece of ice go down the wrong tube.
That would hurt.
So there's going to be high-level drama to come, as you can imagine. It's going to be interesting to see who caves first. I mean, here's the thing: we're already seeing market chaos. We're already seeing troubling signs on the jobs front in the labor market. So the jobs numbers, of course, we're going to have that jobs data out today. This is why Wall Street is heading for a fourth day of lows. We saw the ECB, the European Central Bank, this morning with some breaking news on that front. They are going to ease their stimulus. They're going to start to roll back their stimulus buying, their bond purchasing in the European Union. The Federal Reserve likely going to do the same thing in the United States, even as we're continuing to see really troubling signs now in the economy. I mean, never mind the fact that we have all these unemployment benefits that have run out, and we have an eviction moratorium that's drying up. So where are people going to go? What's going to happen now if literally Wall Street starts to collapse and everyone's retirement plans? That's the thing. Americans' retirement plans, people don't think in terms of like buying performing assets. So most Americans just think, I'm going to get a 401k, which is a piece of garbage.
Or pensions or.
Yeah, well, pensions are gone, right? I mean, who has a pension anymore if you're lucky? And even if you think you have it, do you really? When you see all these pension plans that have gone bankrupt. So all of these people who have their hopes and dreams tied to some crappy retirement plan, tied to Wall Street, and then that collapses because we can't get our financial house in order in the United States. It's sure we can continue to print money so we can carry out wars on a regular basis, but we can't have a balanced budget like we had in the 90s under Clinton with a Republican Congress, by the way. Imagine they got that done.
It feels like there's just like a bunch of writers in the background somewhere writing this drama, and they keep like pitting sides against it. It's like keeping us, divided so that it's like we're watching a TV show, like a drama series. So it's like you couldn't write this stuff.
Yeah. No, I think you could write it, but it would be rejected or you wouldn't get a book deal.
Right.
Because wait a minute, you're saying, so wait, you did this, David. Like, David, here's your book. Right here's the book that you just submitted to us, David. And I noticed that this is the sequel to your previous book. And in your previous book, there was squabbling with the debt limit, and it came down to the wire, and someone in Congress finally balked at it. And in this book, you're doing the same thing, but it's a year later in a different book. Like, I've seen this story before, and I'm not going to buy this book. Now, that's what we're going. I mean, we go through this crap every time. We had this issue happen right before Christmas. Here we are again on this budget resolution to keep the government running. So, what if the government shuts down?
But in the first book, the people benefited, right?
Oh, always. Oh, yeah. People are always doing great.
Yeah.
I mean, think about this, right? If we have soaring treasury rates, okay, it would set off a chain reaction in the financial markets if they don't get their act together. Again, if you think of treasuries as sort of like a risk-free asset, treasuries are the things that like grandma would invest in, right? Because she doesn't like risk. Well, now imagine like suddenly they're not backed by the full faith and credit of the United States government anymore. It's the benchmark for which everything around the world is based. Everything, right? The reserve currency of the world, U.S. treasuries. Cynthia became a channel member. Thank you, Cynthia. Everything from stocks, bonds, to securities, they all focus on what that 10-year treasury is doing. If you don't understand how all this stuff works, the reason whenever time you flip on financial news channels and you hear them talking about the 10-year treasury, it's because that's the standard. A spike in treasury rates would cause booming stock markets to become unglued, and there would just be absolute. First of all, and maybe this is what we need. I don't know. I think it would be a disaster, but maybe all these overvalued companies that aren't really worth what these stock prices reflect would come crashing back down to a reasonable standard. Like the air would just be left out of the market.
Don't you think at some point, like in order to right the ship, something's going to have to collapse? It's going to absolutely have to. Like, I don't know how we fix it otherwise, because it's to a point where everything is so bad on the financial end that they're continually propping things up. I think that the success of the market is not based on the economy anymore. It's based on how much money the Fed can pump into it. Like it used to be, stocks were regulated by, you'd see that like if there was a lot of movement in the middle class, like we were out spending money. That's when stocks were up. But now it's just like That we're not outspending money. The middle class doesn't have any money, and they're still seeing record profits and stuff. Something isn't right. It's got to crash.
No, as we talked about here on the show about 6 months ago, I showed you a chart on the corporate debt. I don't know if you remember that chart. Maybe it was like almost a year ago now. And I showed you what the amount of debt these corporations are sitting on. They're sitting on debt, and they're not investing in their company, right? So they're not investing in research and development or hiring. And what they're doing is they're paying enormous CEO salaries, and they're buying their shares back. And they're sitting on massive debt. So what are these companies worth? Like, most of them are completely overvalued.
Well, and when you say they're sitting on debt, we continue to send them subsidies and bail them out whenever it
Right.
gets too bad. So it's like, what do they care? You guys, we don't care. Let's just run up debt, and then the government's going to bail us out. So here's your $30 million. Go get a plane, man.
Mark Zandi, Moody's Analytics, says stock prices would crater. We'd all be less wealthy instantaneously. Not only would millions of Americans lose money in the stock market, but it will also suddenly become more expensive for families and companies to borrow money. So forget about that piece. Like, just thinking about the stock market piece, don't forget that now you want to go borrow money. You want to get a loan to buy a house or a car. Good luck.
You know how hard it is right now to get a loan for people to get a loan?
Imagine it worse or harder.
They're like, hey, during the 2008, we're going to give the banks all this money so that they can start loaning it to you guys. And instead of loaning it to us and making it go out into the middle class, which is where all the money needs to go. All of this talk about stimulus and getting money out and the UBI and all that stuff, that is to get the economy going and giving it to the middle class. But no, they keep giving it to the banks, and then they put it out in bonuses, and we don't see any of it. We have to fight to get loans. We have to fight the credit system. I just had to fight the credit system recently, where I'm like a 750 beacon score, and because one credit card had an annual fee that I had canceled and they never said anything, they dinged my credit, took me down to a 630 something, and it affected my interest rate on my car from like 2.99% to 12% interest.
Jeez Louise.
And you can't talk to them anymore and be like, hey, yeah, you should see my credit was perfect before. It's just this one thing, and I'm getting it off my thing. They're like, yeah, we don't care. They only go by the number. They don't even, you can't even have a conversation with them. So we have to fight to get our money back.
Yeah, and that's how the United States operates. It's a debt economy. And so that's how we operate. You want to go get a home loan, you need to have good credit. I mean, that's the bottom line. Or if you don't have good credit, you're going to pay $100,000 more for your loan over the life of the loan because your credit is a little bit dinged.
Well, and
imagine
when you say $100,000,
like $100,000 more for your loan if you want to go get a home.
And when you say good credit, I have impeccable credit. I pay all my cards off at the end of every single month, but they don't care. They don't look at it. They go by the number. Mm-hmm. So if you're looking to get something, like when I went to get the car, I noticed all of a sudden I started getting these things, hard inquiry. And those, like, even getting your credit checked takes your credit score down. It's stupid. They just make all these barriers. It's like with the stimulus, they have to put all these barriers in place for us to get any money.
Yeah, and well, not for Wall Street. Wall Street can get money lickety split, right?
And the banks are borrowing at 0%.
0% interest they can borrow. Bam, they can get money overnight. So if the debt ceiling is not lifted, then the federal government will technically default, on some of its obligations. It would be then forced to basically prioritize who it pays and who doesn't. So who do you think is going to get paid back first? Wall Street. That's who will get paid back first. And other countries, right? They'll probably pay China back first. Ultimately, someone is going to lose out here, whether it's federal employees, veterans, Social Security recipients. I got an idea. Here's what's going to happen. They're going to pay China back first before they will make sure that Social Security is solvent. I mean, we're talking about Social Security. We're talking about Medicaid. We're talking about all of the things that we've come to rely on for some little basic social safety net, as crappy as it is, drying up. Hey, but we continue to spend money on wars, so I guess we can continue to funnel that. By the way, it's so funny, actually. As part of this negotiation over the next few weeks on the debt limit, we've got the reconciliation bill, we've got the debt limit issue, we also have an abortion issue that we're dealing with, obviously in Texas. But among the other issues is the Defense Authorization Act. How quickly do you think they'll pass that? How quickly do you think that they'll? By the way, they're passing an additional $24 billion as part of the congressional authorization for a Defense Act. How quickly do you think they will funnel money into the war zone?
It's probably already there. They're probably like, just go ahead and take the money and we'll pass the bill later.
There are some progressives who are saying we're not supporting this. No way. We'll see.
Well, like I say over and over and over again, if the Squad and Bernie would team up, they could control all these bills, every single one of them.
Yeah. Could, but they won't. Kenneth Watterson in our chat left me a super chat. Says, I left you 3 questions in the chats. I don't know where that is, Kenneth.
Yeah, I responded and asked them to super chat because there's no way we can go back and filter through all the comments we get to find questions. We try to answer as many as we can, but...
Oh, I see one here, Kenneth, but I'm in the middle of another story here. But anyway, he asks, what's the best digital wallet for cryptocurrency to be stored on? Well, I personally use a Ledger. Is a hardware wallet. Hardware. You can have the Trezor and the Ledger. Those are 2 that are hardware. My wife got that for me for Father's Day, so I've got the Ledger hardware wallet. But you've got other. Coinbase has spent a ton of money as far as like an online exchange. They've spent a ton of money on security. So as like an online exchange, that's one if you're going to store it online and trade. But I personally think cold storage is the best move. Thanks for subscribing to the channel. You can also become a channel member by going to morninginvest.com/join, where you can stick it to the mainstream media and support independent journalism. We're able to bring you the stories that you won't see on any of the major billionaire-backed networks. Thanks so much. We'll see you next time, everyone.